Good morning, everyone, and welcome to Markets with Megan. I'm Michelle Welsh, and I am joined by Megan Horniman, Verdant's Capital Advisors Chief Investment Officer. Good morning, Megan.
Good morning, Michelle.
So today we are talking about the GDP report in our Markets with Megan. What do you have for us?
So this morning we got the second reading on the first quarter GDP report, and GDP actually came in a little bit better than expected. So it came in at 1.3% versus the initial recording that came in at 1.1%. There's some optimism around that the economy is stronger than we thought, but let's just remember the first quarter is in the rearview mirror, and the banking crisis didn't really happen until March. So it was the second half of the first quarter, and there's been very little to no evidence that the data is getting better for the second quarter. So we are still a little pessimistic, I guess you could say, about the economy this year. The uptick in the revision was primarily due to consumer spending and business spending. And the two things that we're seeing now is, first of all, the first quarter was some post-holiday discounting. So consumers spent there. But if you look at consumer confidence, it's showing the expectations component that is just in recession levels. So we don't think that type of spending is sustainable this quarter. And unfortunately, we still are in the view that we will not be able to avoid a recession this year.
Okay, understood. And so two questions for you. Mm-hmm. One, what is the headline that we'll probably be seeing, and what's behind that headline? And two, what does this all mean for investors? Mm-hmm.
The headline will be that GDP is better than expected. And unfortunately, remember, it's in the rearview mirror. That's the first quarter. The tightening that we're going to see from banking lending conditions, that won't start to filter into the economy until this quarter and going forward. For investors, it doesn't change our view on the equity market. We still do think that the equity market's a little too optimistic about the economy. It's, I think, running on some fear of missing out at this point. We are getting even more cautious now that we're watching the market run up in the midst of what we're seeing as a pretty dismal economic picture.
Okay, well, thank you very much. As always, very enlightening, Megan. And thank you to everyone for listening in today. If you have any comments or questions, or if there's a topic that you'd like Megan to cover in a future episode, please email us at podcast@verdants.com. Thanks so much.
Thank you.